Hello, everybody. Good morning. Hope you all can hear me okay. I am a little bit on the road for a few hours, so I'm not in my usual place. But anyway, let's talk about the worst crash since 2022. We had a lot of crazy stuff going on, and we'll dig into what's happening with crypto, what's happening with a little bit of macro, some good news, some surprises, some things not so surprising, and let's talk about some V-shaped recoveries for some assets, not all assets. Hold on a second. There you go. I think I'm working, which is good news. You never know when you're on the road. Let's jump in, and of course, this is not financial advice. Still a lot to cover. We're going to start with the ugly news as normal. Now, this is a beautiful little meme from Sylvain, really talks about the perspective of the markets. Despite what has happened, some people called it financial Armageddon. Some stocks are only down 2% for the week. Some cryptos are down 40% for the week. And some meme coins are down 99% of the week. So everything is relative. Let's talk about the unlocks. Oh, spelling mistake in the title, somebody's reporting. We'll get somebody hopefully to fix that soon. And yes, it's a bit of a panic. So let's look at some of the big unlocks as well for the week. We have the same usual suspects literally every single week in here. Cyber, GMX, IMX, XAI, all these AI plays are very, very dangerous. Fort, Glimmer, ENA, they'll just rain tokens forever. ID, Aptos is there, Pendle is there. We'll talk a little bit about layer 2s in a minute too. And Cyber and Stark, these are just continue to rain down. It's very, very difficult to make money when you have assets that just continue to actually dump tokens on you. Let's look at a little bit of macro as well. This is the ISM Contracts. It's a measure of manufacturing in the US. And what is really scary is PMI has been below 50, i.e. contracting, for 20 out of the last 21 months. This is data going back to the 1940s, and that's only happened one other time, and that was back in 1989. There was a recession back then in 1990 and 1991. This is a scary thing. Basically, everything is grinding to a halt. People are not ordering things, and I hope the Fed sees this. They're going to cut anyway, but the question is how fast and how much. That remains to be seen. In addition, the Japanese government caused a lot of the ruckus over the weekend when they increased interest rates from 0 to 0.25%, and the stock market fell 26% in a day. That was a historical move, and the Japanese stock market is basically below levels not seen in years, and that is just how fast risk happens. In addition, this is a little bit of sad news. Remember, we're still in the ugly news, but as a sign of how recession-like, depression-like things are, 17% of 25 to 35-year-olds in the US now live back with their parents. This is the highest share since the period following the Great Depression in 1940. See, we're talking about the 1940s twice in 3 slides. That's a sign, everybody, that things are getting very expensive. The youth don't have the money to go and buy their own houses or even live in their own apartments. It's kind of scary. Anyway, that was the ugly news. Let's get into some of the bad news as well. And a big thank you to the moderators in the chat. American Beijingers, Sean Donnelly, K8, TNT Tesla. Let's look at the fear and greed. Fear and greed rebounded. It did fall as low as 17 yesterday, and it's back up around 20 or 22, if not, no, 30. It's back up at 30. So it's rebounding pretty fast. Again, nothing can keep. Think of crypto and Bitcoin like a big, what do you call those balloons? A big beach ball. It's trying to keep a beach ball under the water. It's very, very difficult to do. Let's look at the crypto market over the last 7 days. There's everything divided by Bitcoin. The only things that have beaten Bitcoin over the last 7 days are Leo, Tron, Solana, Polkadot. Pretty much everything else has been red. Super Soul Man, appreciate you. We'll talk about some soul stuff in a minute just for you. Let's look at the dollar terms, the melting ice cube terms. You can see here, Bitcoin is basically flat for the week. Despite what we've gone through, we are flat, which is pretty unbelievable. ETH down 5%. They got hammered. Vitruvian Maniac, thank you for coming. Binance got hammered too. Tom got hammered. But Solana's up 5%, and DOT is up, Tron is up. So select assets have actually held together despite the storm we've been through over the last 7 days in dollar terms. Let's look at money flows, digital asset fund flows. The investment products saw outflows for the first time in 4 weeks, totaling $530 million, over $500 million. And a lot of people believe, I have a theory that some people kind of knew the carry trade was unwinding, which was rumored to happen. I just didn't expect it to unwind so fast. There's also a lot of fears of recession in the US, and there's also geopolitical concerns and other broader market liquidations across most asset classes. So many of the ETFs kind of felt something is up and they took some risk off the table. And that's completely normal. Let's look at the by fund. You can see here two big dumps. Ethereum is down 150 million. Remember, that's less than 400 million out of Bitcoin, but the amount of assets under management in funds is like a seventh. So it's nearly a third, despite the assets only having a seventh. And that is a big deal. Again, 146 million out of ETH. The net outflows of the ETH ETF are nearly $500 million. And it does mask the positive inflows, primarily by Blackrock. No, I think it was at 600 million out from the incumbent Grayscale Ethereum Trust. There was a tiny bit, 2.8 million out of Solana. Litecoin up 200k, XRP up 400k, short Bitcoin up $1.8 million, which is basically a sign when that goes up, people are going short Bitcoin. So watch that one carefully. Now, it is very rare I agree with Peter Schiff, but he has kind of changed his tune. He's looking to kind of throw fear and FUD at Bitcoin in any way he can. But this is kind of interesting. Owning Bitcoin in ETFs defeats the entire purpose of owning it in the first place. It's no longer decentralized, it's not peer-to-peer, it's easily seized by authorities and can't be used as a currency for payments or transferred across borders. It's not your keys, not your coins. It looks like I'm not the only one with a spelling mistake today in my title. Hopefully we'll fix that. Anyway, but this is true, but it's only true if all the Bitcoin ends up in ETFs. I think we need to get alarmed if we get to the 20% of Bitcoin in the ETFs. Up until then, there's no need to fret or worry. But the money coming in from these ETFs is floating all boats, which is a good thing. Now, this is kind of stunning to me. And I always talk about the challenge of Ethereum layer 2s and value capture and the whole Band-Aid issue, but this is a stunning chart. There is a new Ethereum layer 2 appearing every 19 days. How can hundreds of these things actually survive? That is the question, and I think it's just too complex. Let's go back and have another view at the ETF versus, this is a great piece from the far side. It's how the Grayscale Ethereum Trust is dumping faster than the Grayscale Bitcoin Trust did. So it looks like what we expected to happen is happening actually quicker. So, but again, it'll bleed out soon. They've lost almost 25% in a very short window of time, a week or plus or so. So that thing should be gone soon, and then we'll see what happens next. Now, when we look at the money flows into the new ETH ETFs, the positive we have here is Blackrock in black are buying a lot of it. They're up to about $1.8 billion worth. But the bleed out from Grayscale is north of $2.2 billion. So again, still a net negative, 600 million or so. The gray bleed will slow down like it did with Grayscale. It just took 100 and something days for that to happen. I expect the ETH to bleed out much faster. Now, there's other stuff happening with Ethereum too, because I got a lot of questions on it. And there was a lot of questions over the Jump crypto and their heavy dump over the weekend. A lot of people believe that they needed liquidity, or they wanted to stake somewhere else, or they knew the carry trade was unwinding. We don't know exactly what, but this is from Ki Young-ju. And Binance net flows, including Bitcoin, a whole bunch of stuff hit an all-time high. But crypto native institutions like Jump Trading were using Binance, and inflows from retail investors, etc., were not at all high, but the outflow from Jump was extreme. Now, there's other news regarding Jump Crypto too, because they are not done yet. They still have more to go. This is from Woo Blockchain. Jump trading transferred 11,500 ETH on 4th of August to the centralized exchange addresses and transferred about 16,000, worth about 50 million, to continue applying for redemption. But they still have nearly over 21,000 left. So more to be redeemed, more to be sold. So perhaps we get some more headwinds for Ethereum as we go forward. And another little bit of bad news before we get into the good news is OpenAI is collapsing under true AGI fears. When normally when Microsoft buys something, things go sideways. But and I know they only bought 50% of it, and there's a lot of other consternation around OpenAI, which I will not get into. But something is happening, and I'm not sure what it is. And you'd think, with all these people leaving OpenAI, something's going on. But I think what they see is they have no path to true AGI, which is artificial general intelligence. We see a version of that, actually. I drove it last night, of real-world AI applications, but just LLMs aren't going to cut it in the future, and these people are ambitious, and they're looking for more challenges. That's perhaps why so many are leaving. But remember, a company is only as good as the talent that it has in-house. And final piece of news regarding AI, despite the fact that a lot of people are leaving OpenAI, big tech is still betting on AI. It will be a massive deflationary force. This is the biggest revolution ever to hit the planet, way beyond fire or steam or production line automation, etc. This is crazy. And the companies, despite the little bit of a retracement, companies excluding NVIDIA reached 271, and that is the third highest on record. The largest number was recorded in Q1 2024, when AI was referred to 290 times. But the point is, AI is still alive and well. It's not dead. The hype is not dead. And it is still rising, even as these AI tech stocks are retreating. All right, if you want a recap of all these videos, there's a team that does that. Very grateful to the team. Podcasts, emails of everything every single day for about 10 cents a day. Now, relieved to get into the good news. First of all, REKT Capital posted this on Twitter yesterday and also expects a September-October rebound in the Bitcoin price. So sometimes it is always darkest before the dawn. Things are a little bit, depressed right now out there, and I get that. But at the same time, we just have to hang tight for a little while. Bitcoin is still, as I speak right now, at about $56,000, which is not bad considering it fell to sub 50K only a few days ago. So let's roll on September. And other crazy news too, XAPO Bank offers interest on Bitcoin in the UK. And that's the first UK bank offering interest on Bitcoin. And it's under a passport program approved by UK and Gibraltar regulators. Not sure exactly how much they're going to pay on Bitcoin or what the structure is, but I thought that was interesting how the UK is really coming around. Also, a quick correction to a post earlier on Patreon and Twitter regarding, I saw a move just on the fly, checking in on the wallet, 6,000 were gone from the Mr. 100 wallet. As it turns out, per HODL 15 Capital, they were not sold. That's a relief, because 6,000 Bitcoin is quite a lot. But they were moved to another wallet. So now we got yet another wallet to track as to what's going on. So that was a little bit of alarm there for a second, and then followed by some relief that they did not sell this. They are still, this still has all the earmarks of a hardcore DCAer into Bitcoin. We don't know who it is, but I hope we will find out one day. Now, speaking of narratives, this is the top narratives over the last month. And it's stunning, despite all we've been through. DePIN wins the month. It's positive, up 14.2%. And of course, DePIN is all Solana-based. It's a solid narrative and appears to be a narrative that can ride through any storm. So imagine when the bull market really starts in earnest, what this DePIN narrative will do, along with DEXs and AI and all the other good narratives out there. So I thought that was interesting to share. Also, regarding DEXs, ORCA snaps back. Radium is down to 826 million. It used to be 1.2 million a week ago. Now ORCA is nearly 1.6 billion in trading volume. The limit order book on the ORCA has just exploded. Also, Phoenix used to be like a top 10 player, but never that big. All of a sudden, they become the second largest DEX on Solana by 24-hour volume, hitting over 1 billion for the first time. So again, all of these things will pop. Every dog has its day, as they say, and this is just incredible. Just these three alone have nearly 4 billion in trading volume in 24 hours. It's madness. And a lot of that is getting a lot of attention to what we call the Solana chain, and as I call the Solana black hole. Other breaking news is the SOLETH pair just hit a new all-time high. Remember, this is not Solana dominance. This is Sol versus ETH, and it just broke a new all-time high. And obviously, this is fueled by not only Solana doing well during this little market crash, in fact, fully recovering and more over the last week, but also a very strong V-shaped recovery, and also fueled by the fact that Ethereum was down hard due to the ETF selling more than they were taking in, and of course Jump Crypto. All of this is fueling this action here, and a lot of articles are picking up on this too today. Solana price rallies to all-time high against Ethereum. The SOL-ETH ratio hit a new all-time high, and Solana registered a solid recovery. Calls for Sol to continue to outperform ETH have filled the market, and the V-shaped pattern suggests that we are going up from here. By the way, I remember there were three big narratives at the Bitcoin conference. One was, I think, when is Trump arriving? Number two was, is ETH dead? And number three, is Sol the new ETH killer? They were the three things discussed at the Bitcoin conference, and you'd think they'd only be talking Bitcoin, but it wasn't the case at all. That was it. Now, the SOLAlt gainers, they've been really badly hammered. You know, they've always been very high-risk assets, but just to see how they can bounce back is pretty staggering. These are the top SOLAlt gainers over the last 24 hours. ORCA, 36.5%. Zeus, 24%. SOLEND, 36%. SOLEND been smashed as well. Shadow, 17%. Nasana, 19%. HNT, 17%. 25% in the honey. Very, very fast rebound. And again, keep an eye on the narratives. They will help drive these ones that fit in those narrative boxes. Now let's talk about alt season, Bitcoin season. We're up to 22, it was 14 last week, so not that bad. When we look at all the different assets, this is the top 50 cryptos performance over the last 90 days. Everything but six chains basically were down. Solana basically broke even. Then you have, I don't know what that is, WSF, Monero is still there, Aave's there, Kaspa, and Toncoin, of course, the winner over the last 90 days by far, kind of skewing everything else. And then Bitcoin ranks number 12. Last week it was number 7. So again, creeping up to, there will come a time when Bitcoin will be down to the far right and we'll be in a full-fledged altcoin season, but I think Bitcoin has a long way to go first. Let's look at the stock market quick over the last 7 days. You can see here, this is not as desperate as people would have imagined out there. A lot of stocks are just down, 5%, 2%. That was the joke at the beginning with Microsoft down 2%. Nvidia down 10%. They got hit hard. What else? Apple down 4%. Amazon down 10.5%. And Tesla down 14%. They also got smashed real hard too. Again, to some, that would be a buying opportunity. Google down 5%. Not bad. Speaking of Tesla, I still believe it is the most disruptive company of our era after Nvidia, but Nvidia has, I think there's not much juice left to squeeze there. This is a shout out to Cern Basher, friend of the channel. He said, FSD will be much safer than humans. And it's not saying much these days. Humans are awful drivers. I mean, I drove 5 hours last night on FSD in the dark. At times, I couldn't even see things because it was just such dark roads. but I would not feel comfortable in a car without FSD. Simple fact. And when you see other car drivers looking at their phones, veering all over the place, not keeping in their lanes, truck drivers falling asleep, it's dangerous out there. But proof already for CERN Basher, FSD is already a lot safer than humans. This is a latest study from Sawyer Merritt, and blue is Tesla vehicles using autopilot technology, and the amount of millions of miles driven before an accident occurs, it's now up to nearly 7 million miles before you have an accident. If you're using a Tesla vehicle without autopilot FSD technology, it's more like 1.5 million miles, and the US average is about 600,000 miles. So literally, FSD is now 11x safer than a human. That is kind of stunning to believe. And speaking of who I believe to be the best capital allocator in the world, this is from Warren Redlich. It's an X update. How it started, Financial Times said Elon Musk fails to convince doubters that he will save Twitter. Elon Musk's X continues to die a slow and tedious death, and maybe we should all be grateful. And how it's going? Well, now they now call it the largest and most influential platform on the planet. X is where people get their news, where people try to source their truth because they know they can't trust mainstream media. And final piece of news for today. This is, you could construe this as bad news, but I have it in the good news category. Central banks have conducted 35 rate cuts over the past 10 weeks. And that exceeds Q1 2024 levels. Earth Jeremiah, come in, JP. Global central banks have been cutting interest rates at their fastest pace since Covidians, the 2020 pandemic. And over the last 25 years, most cuts were seen in May 2020, when global rates were reduced 92 times. And by comparison, global financial crisis, they only had 76 cuts. So there were more cuts for COVID than there were for the global financial crisis, and now we're almost halfway to the global financial crisis cut level. And the US still has not cut, but that has to come soon. All the other central banks are doing it. Normally they're all in cahoots with each other. So that's the story today from the road. Quick and dirty, 40 slides. Hope you enjoyed it. Hope you got something out of it. We are recovering slowly, and we'll step back up. But it was good to see V-shaped recovery in some of our favorite names as well. And also maybe some buying opportunities that we had over the past few days because of this crash. Again, thank you, Preston. I see you out there, buddy. Love you too. It's an ugly time. We'll just get through it and roll on September, my friends. Take care. Bye-bye.